Ladies and gentlemen, as we begin the day on, on this session on the dynamics of shipping global freight markets, I'm pleased to introduce our moderator, Mr. Kingsley Abevikrama, General Manager at CMA CGM, Sri Lanka. With his extensive expertise in shipping and logistics, Mr. Abevikrama brings valuable insights to this discussion. Let's give him a warm welcome.
Thank you very much for that nice introduction, and good morning, ladies and gentlemen. So we are just about to start our very first interesting session, and for this first session, we have 4 very interesting personnel already in the house. So before we formally introduce them, I would like to expose you that in my panel, in this first session, we have a fortune teller, we have an astrologer, a rich ship owner, and a port owner. So it's going to be interesting, and that's going to be the session. And before I call each panelist onto the stage, I would like to request our keynote speaker to start and set the pitch for us. There is none other than Mr. Shailesh Garg, the Director of Drewry Shipping. I'm not going to introduce him because you already heard him, saw him yesterday. And I would like to invite Mr. Shailesh Garg to take over the podium and to set the speech for us to start our very first session. Mr. Shailesh, over to you.
Okay, so thanks for the kind introduction, and good morning, ladies and gentlemen. Before I start, I would also like to thank Rohan and team for the kind invitation and for this opportunity, and also congratulations for this well-organized event and for all the hospitality extended. So as just mentioned, I don't know if I'm a fortune teller or an astrologer, but yeah, we do forecast. And I would like to start with a caveat now. And you said that we are fortune teller, that I'm going to tell briefly about the trends in container trade and what we are expecting in freight markets. But that's the big caveat we always use now for last 2.5 years. That's that because of all the uncertainties in the market, the forecasting has become too complicated. And that's where we are now using a lot of heavy doses of ifs and buts and conditions and statements to make sure that we are not held accountable for something which is not coming right. So yeah, we try to be fortune tellers, but yeah, becoming difficult. So, but at the same time, becoming interesting. So with that caveat, maybe I will start with my presentation. Sorry. So this is a brief agenda. I will not go into that. Just a very quick one. Drewry is a leading maritime research and consulting services provider, and we have been in the business for more than 50 years. And that's what we have been doing. So we only focus on maritime sector, nothing else. So you can have a look at it. So to start with, I'll look at the world economic scenario. Some good news there, because we were always worried at the start of the year that the economy may have some problems with the inflations and other things, but global GDP outlook is looking stable, but somewhat flat. But still, I think no major red flags as of now. There have been upgrades to United States GDP forecast recently, which is a good news, which has actually helped in mitigating some of the downgrade in the European countries. So all in all, global economy is still looking stable and maybe for next few years. However, the downside risks are still there, and I think more tilted towards the downside, especially China slowdown. And as I just said, all the uncertainties around geopolitical scenario, supply chain disruptions. New thing which we 2 years back never thought about is weather extremes, where we saw recently how Panama Canal created problems. So yeah, so this is adding to the one more factor to the whole scenario. So once we have looked at, okay, economy is doing well, so how the container trade would look like. Again, if you see the second chart, the global throughput in 2024 is likely to grow just around 5%, 4.8% to be precise. First half has been very good. It was very strong, it's around 6%. which is basically continuing from what we saw in the last quarter of 2023. This momentum has been there in the second half, but slightly slow. So overall growth, we think, will be close to 5%. One exception in the region, which we are looking at, is Middle East, where we saw that the trade has significantly declined. And we all know the reasons because of the geopolitical scenario. And one of the major impact which the Red Sea crisis has been for the three ports which we have shown is Jeddah, King Abdullah, and to some extent Salalah also. So that has put a lot of pressure on them. So we expect them to decline by almost 7% as a whole, as a region, but not all the ports. Jebel Ali is doing reasonably okay. King Khalifa is doing okay. But as a region, they may see a minus 7% this year. But we expect a recovery next year. So probably we'll see some good results from the region in 2025. However, the growth for the next few years, 25 to 28, is not same as what we have seen in 2024, and we expect it to be close to 3%, basically on an average probably 2.8 to 2.5%. So that's the outlook we have for the trade. Now, if we look at the regions, definitely each region has got different growth patterns. As we discussed yesterday also, that South Asia is among one of the fastest growing region, and for next 5 years also we expect them to maintain the momentum. So we expect the highest CAGR for them is 5.7% going from now. US has also shown some recovery, which North America particularly as a whole we are seeing as 4.7%. But just to add that this is because of the very high growth we are expecting there in 2024, which is coming at the back of a negative growth last year. So probably next 2-3 years will not be as high as what we are seeing now. But yes, I think the North America will keep the momentum. Middle East, as I said, will decline this year, but then we expect recovery starting next year. So overall, for the 5-year period, the growth still looks below 2%, but then next 3 to 4% would be much stronger than that. Overall, global growth for next 5 years is expected to be around 3%. So that's the economy and trade outlook, and this is all with all the caveats that we don't see any major new disruptions coming in and probably an improvement in some of the geopolitical scenarios. So this is a best case scenario, if we can say. This is next slide is just an extension of, sorry, I missed this graph. I am so sorry. Just a second. So I was discussing this one. Sorry, I thought I pressed this. So this was the region I was showing, I just described. So we can see that how South Asia is one of the growth drivers. Just taking that point forward, South Asia, as I said, has been growing, and we see next 4 years is again a very robust growth for 4 years, which means that the share of South Asia in world container trade is expected to increase from close to 4%, which is estimated in 2023, to almost 4.6% by end of 2028. So, which is a good news, and we have been discussing how we need new capacity and all the development to manage this projected growth. Now, looking at the supply side, so how does the supply-demand outlook looks? So, I think I'm jumping the, sorry, this is becoming a bit. So, if we look at the supply-demand outlook, it looks like typically when we say that there is overcapacity, the ordering goes down because ship owners want to manage capacity. But currently, if you look at the scenario of ordering, it looks like ship owners are not worried about overcapacity, or they are just concealing it to the extent possible, because both active fleet and the order book is buzzing with the activity. We saw almost 100 vessels ordered in third quarter of 24, which means around almost 1.4 million TEU of capacity of ordering happened. Now, why this is happening? The key question is, and second question is, how long this can go? Now, there are two aspects which I would like to highlight here. One is that this ordering may look high, but what we are seeing is that there are only a small group of people which is leading this ordering. So if we say 6 of them are responsible for almost 75% of ordering, and MSC being the largest of them. And each of these companies have got different strategies. So it's supply demand, freight rate market, this is all good, but then they have their own motivation and strategies. One of the motivations is to get higher market share. Second is also the decarbonization issues. So people are ordering now new vessels which are dual fuel or alternative fuels, and that is pushing more and more ordering. And third angle to this is that ship owners know that the space available in new building is getting filled very fast, because now the other sectors are also joining the bandwagon. So I think the idea is to get the slots now at a rate which is probably lower than what they expect in the coming months or years, next couple of years, and get the slot now and be ready with their vessels and capacities in next 2 years. So I think this is driving the ordering. However, we may see some dip in that next year, but that all will depend how the freight market behaves, because this is also coupled with there's very limited scrapping happening. So there is a lot of pressure going on increasing the supply. So we have seen shipping lines have been good at managing the capacity, but this new deliveries coming in, new orders putting, I think that will add more and more pressure on the supply. So when we have looked at the demand and we have looked at the supply, the next question is that how does this supply-demand balance looks like? Now, what we have seen in the last 2 years, that we have seen more and more vessels being added to the fleet, but still the freight rates have been on a higher side. And this has been because of the different disruptions and everything which we are looking at this, that they have been able to absorb this capacity. So diversions from the Red Sea has added more demand for the vessels. Slow steaming and some port disruption means port congestion. So that much more vessels needed to take the cargo around. So till now, ship owners have been able to manage the capacity, and this is what we think will continue next year also, because we were hoping when we were at the start of the year, or even till the start of the second quarter, that this Red Sea situation will improve and probably will get to some normalcy by mid of next year, 2025. But unfortunately, we have done some quick survey through the industry and our own assessment that this situation may not change entire 2025, and we may continue with this divergence. And therefore, we assume that if this continues, then the more and more vessels joining the fleet will be absorbed because of this disruption and requirement for additional vessel capacity to cope with the increase in volumes. So with that in mind, we have gone 2 scenarios. As I said, we are now working with different scenarios. So one scenario you can see, I don't know if you can see the graph currently clearly, is that if a prolonged Red Sea divergence keep happening, the effective capacity will further squeeze, and there will be pressure on that, and the index will move up, which means there will be slightly more pressure on the freight rate, and there will be increase. And therefore, we have given these 2. So if there are no, and then if we add another angle to it, is idle fleet. If suppose there is a pressure on the ship owners to manage their freight rates, there is another option of idling the ship, which they have done in the past very successfully. So these 2 reasons, if we add to that, the index which we do for the supply chain will go up from the current 84 to 88, which means we are looking more tighter supply situation, and which means that the freight rates will still be at the level which we are looking at currently in 25. So the next slide answers what I've just said, is if supply is looking a bit tighter in 25 and going forward, then what it means for the shippers. Now, we have seen that it has been a roller coaster for the freight market. We had a significant dip in 2023, but then the rates started rising again, and then we are seeing again some dip in the second half of 2024. So and so in second half, we have seen that for 12 consecutive weeks, there has been a drop in spot market. But the one good, not good, but interesting thing has been that spot market has been dipping, but contract rates are still moving up. So there is slightly a disconnect there. So probably shippers are looking at a market which will remain volatile, and we will have a period where freight rates will remain on a higher side. And this is what we are saying, is that the container market will remain quite volatile, both in terms of demand as well as for freight rates. So just taking that point further, these are some of the factors which have been influencing the freight rates. So we have factors which are like extra ship capacity, market share fight between the alliances, maybe lower bunker prices, or slow demand growth, which will help in pulling down the freight rates. But at the same time, we are looking at disruptions and other challenges coming in, carrier capacity discipline, which has been a key. I think till now, before COVID, it was always overcapacity taking over, and the freight rates used to just tumble down, and there was a bloodbath whenever this situation came. But I think post that, with the alliances coming in and all that, the capacity management has been a key issue for all the shipping lines to make sure that they are making enough money. Another angle which is coming, which we have not discussed in detail, is carbon taxes and other costs which are coming in for the shippers, because this will be passed on by the carriers to the shippers. They will not take the cost on their own. And then they have an option of vessels slowing down, which again helps in managing the decarbonization targets which they have. So will freight rates decline in 25? No, this is what we have shown in the previous slide. So this is what the forecast looks like. Now, if we are seeing that the forecast for freight rates is still holding on, what the carriers would be making out of that. So we look at that carriers are going to make enough money. We are saying that EBIT profit for 50 billion for 2024, which was much lower when we started the year because we were not expecting this jump in the freight rates. 65 billion for 2025. So next 2 years is going to be still a good year for shipping lines, as what we expect if the freight rate forecast holds true to the extent what we are seeing. So EBIT margins of 16.6%. So this is what we are looking at, and yeah, which is a good news for maybe ship owners, but and for the industry also in a way. So just summarizing what current situations are for global shippers. So global shippers will be faced with difficult environment, uncertainties because of geopolitical scenario, costs because of freight rates, rising fuel surcharges, and impact of new EU ETS or any other carbon taxes which are and passed on to the customers. So difficult to do the budgeting, as we have a product called freight benchmarking, and we are talking to the clients, and they are also juggling with this, and they're saying that it is very difficult for us to budget this freight cost. They are doing this annual for budgeting, and then suddenly something happens and it goes for a toss. So they are challenged with this situation. And then we are talking of other disruptions like port strikes and carriers not honoring their contracts because everybody is fighting for the slots and capacities. And then new imports, tariffs, China geopolitical situation with the elections and the new government in US. I think this is becoming more and more critical for everybody to look at. So before I conclude, I will just like to summarize all the uncertainties we have assumed in our forecast. This is just as a reminder that we should not take these numbers as it is. We know that there are a lot of moving parts to it. I will not spend a lot of time because I have just discussed some of them, but for us, two most important things is geopolitical situation. We have less control over it, but they have a major impact on us. So the risk level of uncertainty is high, but we think that disruptions may be medium because we have learned to live with it over last 2 years, and we have supply chain which are more resilient now. So impact may be medium, but the probability is still high. And then the labor issue, port congestion. I think this is particularly related to the US, and we think it is medium. But if it happens, then disruptions could be very severe. So these are the two key ones which we are looking at, and we should keep a watch on those. So with this, I would like to conclude my presentation. Thank you. Have a nice day. Bye-bye.